Bitcoin, about 12 years ago, got started. On Halloween of 2008, the Bitcoin white paper was published. On January 3rd, 2009, Bitcoin was put out into the world. At that time, it was a crazy, crazy idea in the corner of the internet. No way could this insane idea ever get any traction. If you fast forward 12 years, we are now at over $1 trillion market cap. Every single financial institution in the entire world is trying to figure out what their Bitcoin strategy is. There's over 100 million individuals that hold Bitcoin personally. The average exposure is about $4,000. When you start to look at corporations like MicroStrategy, Tesla, and Square, they have it on their balance sheet. There's plenty of Bitcoin miners that are publicly traded, lots of other investment firms like Galaxy Digital, etc., that also hold Bitcoin on their balance sheet. Bitcoin has grown up. But the one corner of the financial system where Bitcoin still has not penetrated, it has not been able to weasel its way in, is the banks. And the banks always hide behind regulation. They say, we are regulated entities. We cannot participate in this. We're not allowed to. Those that oversee us will not let us hold Bitcoin, hold or custody Bitcoin for our customers, or participate in the various financial services around Bitcoin and other cryptocurrencies. But that might change now. The FDIC chairman, Yellen McWilliams, has just come out yesterday and said that banks are now potentially going to be able to custody and use these assets. This is a very, very big deal. So first, let's talk about the FDIC. The FDIC, when you go to their website and you say, what is the FDIC? It says the Federal Deposit Insurance Corporation is an independent agency created by Congress to maintain stability and public confidence in the nation's financial system. It's all about stability and public confidence. To accomplish this mission, the FDIC insures deposits. It examines and supervises financial institutions for safety, soundness, and consumer protection, and it makes large and complex financial institutions resolvable and manages receiverships. So basically, the FDIC says, hey, yo, banks, you guys do your job. If you don't do your job, we're here. We got your back. We're going to provide federal deposit insurance. That's the whole point of the FDIC. Now, you may not know about the FDIC, that since its creation in 1933, according to its website, they have been an essential part of the American financial system. In the 1920s and early 1930s, a rise in bank failures created a national crisis, wiping out many Americans' savings. Since the FDIC insurance began in 1934, no depositor has lost a single penny of insured funds due to bank failure. So in the 20s and 30s, there was all kinds of issues. Banks were failing and people would quite literally lose their money. If you had $100 there, the bank failed, you were out of luck. Done. FDIC stepped in and said, we will insure, let's say, retail bank accounts up to $250,000. So if you had $250,000 in a bank account since 1934 to today, you've never lost it because it is insured by the FDIC. Very big deal. Now, how many banks are there? The Best Business Show research team, we started to dig into this and try to understand just how big are the banks? Well, there are over 4,000 commercial banks and over 600 saving institutions. So about 5,000 total institutions that fall under the FDIC. They hold approximately $22 trillion in assets. When we talk about the financial system, the banks are the big boys. $22 trillion in assets, about 5,000 institutions. So if all of a sudden the FDIC is able to come up with regulation and rules that allows these 5,000 institutions to get in the game, it would be a very, very big deal. You would see a massive increase in demand. And for something like Bitcoin that has a fixed supply, if there is a massive increase in demand and a fixed supply asset, the US dollar price has to appreciate to accommodate everyone. It's just simple supply and demand, economics 101. So if we go ahead and we look at what Yellen McWilliams stated, the first quote is, if we don't bring this activity inside the banks, it is going to develop outside of the banks. The federal regulators won't be able to regulate it. And so she's clearly stating that it is obvious that the retail users, the investors, the depositors, they want this product. This technology has found product market fit. And that activity is only going to continue. And it will continue inside or outside of the regulator's purview if they do not act. And so therefore, if the FDIC and regulators decide to come up with a rule set so that banks can get in the game, then that activity or some portion of it will start to actually permeate into the banks, and there will be lots of progress and activities that the banks can participate in. So this is very forward thinking in my opinion, Because you have the chairman of the FDIC saying, this is real, people want it, and it is not going to reverse. The trend will not go backwards. It is only going to go forward from here. We can choose to participate or to sit this one out. But if we have 5,000 institutions and $22 trillion of assets, and there is a brand new financial system being built, a brand new financial asset that we have no ability to interface with, we should probably change that. If we then go and we look at the second quote, she said, the issue there, and she's specifically talking about banks being able to have Bitcoin holdings for client trading, collateral for loans, or held as assets on their balance sheet. She said the issue there is valuation of these assets and the fluctuation in their value can be almost on a daily basis. You have to decide what kind of capital and liquidity treatment to allocate to such balance sheet holdings. So the whole idea here would not just be for the bank to invest in Bitcoin. What they're specifically talking about is for the banks to go ahead and gather Bitcoin, to convert cash into Bitcoin, put it on their balance sheet, and then to use the Bitcoin on their balance sheet for trading for their clients, to allow clients to buy and sell Bitcoin, to allow it to serve as collateral for loans. Again, Bitcoin is the most pristine collateral in the world, and it will also allow the banks to simply hold it on their balance sheet. So it's not just about the financial gain of the banks, but it's also about allowing Bitcoin to serve as an asset in financial services. This is ultimately how Bitcoin goes from simply an investable global store of value to actually being incorporated into the global financial system in a way that most people have thought would not happen. Now, if we go ahead and we think about how they are doing this, we obviously have the chairwoman of the FDIC spending a ton of time publicly stating this and saying we are working on it. Back in May, there was something called a sprint team. That sprint team was announced in May, and it has the goal of ensuring that crypto policy coordination among 3 bank regulators. The FDIC is one of them, the Federal Reserve is the second, and the Office of the Comptroller of the Currency, the OCC, is the third. So what you now have is not just the FDIC chairperson saying, hey, we want to get banks in the game, we're trying to figure out how to do that. But we also can go back to May and see that they put together a team to get the FDIC, the Federal Reserve, and the OCC all on board to get banks in the game. I don't know what the rules will end up being. I don't know what the timeline is for them to get there. But it is obvious to me now that the banks will get into Bitcoin. And as we know, again, whether you're an individual, you're a corporation, you're a financial institution, or you're a nation state, Bitcoin is good for business. And the banks have been sitting on the sidelines, and they do not want to sit there anymore. And so when we see the banks get into the Bitcoin game, my guess is that they're going to realize Bitcoin is the best thing for their business.